Hey, what's up, homies? Welcome to another episode of the Homies Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And hopefully together we can give you a pretty good idea of what's happening in today's crazy real estate market. We got a really good one for you. We're going to be going over some of the mortgage statistics, right? Are there more buyers on the market? Are there less buyers? And then the overall real estate market for the United States. And we got some crazy records that we're breaking and that we're on track to break moving forward that I want to divulge to you. So with that said, let's go ahead, Angel, and let's jump right into the podcast. So the Mortgage Bankers Association announced that mortgage applications increased 2.1% from 1 week earlier. So the average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances of $548,250 or less decreased to 3.11% from 3.18%. And the average contract interest rate for a 30-year fixed rate mortgage with jumbo loan balances, so greater than $548,250, decreased from 3.27% to 3.31%. Talk about this. This is your world right here.
As far as the applications, I think as far as applications are going to continue to rise. Obviously, it's how we mentioned in previous podcasts. We're heading towards summertime. It's time for buyers, a time for the real estate market in general, sellers and buyers to, more activity going on. So I do expect that mortgage applications to continue to rise as rates stay low, right? Rates have been better, week over week, actually, for the last couple of weeks, little by little. But this week, end of last week and beginning of this week so far, the rates have gone a little bit back up. So my prediction again is towards summertime when there's more, with this even a more saturated market, especially for the buyers. I expect rates to continue to climb back up. So anybody who's thinking of refinancing, I would say do it ASAP because you obviously want to get the lowest rate possible if you haven't refinanced yet.
Absolutely. So, talk to me about the interest rates that you're seeing right here in Southern California and Los Angeles County. What are you looking at for, an FHA right now? What are you looking at for a conventional?
Yeah, so FHA is in the twos, higher twos, mid to high twos. So, anywhere between I've seen those 2.5, 2.8, around somewhere in that market, in that range, right? Just depends, and depends on your credit score and all that stuff. For conventional, that conventional is a lot more, remember, credit driven, right? So the better your credit score on the conventional, the better your rate's going to be. You can sometimes get your rating as low as the higher twos, and then the low threes, as I mentioned here. So rates across the country are going to be similar, right? It's not depending on your state or anything like that. All banks offer the same rates across different countries.
Absolutely. So an interesting thing to note here is, according to this Mortgage Bankers Association weekly report, and they just dropped it this morning, the share of FHA loans and VA loans went down. So a majority of people are getting pre-approved conventional. Why is this important? Right now we're in an extreme seller's market, right? Sellers get to really cherry pick the best offer. And because FHA offers typically are a little bit more strict, right, as to what the home needs to fit criteria wise, a lot of sellers are kind of being deterred from that right now. We're like, hey, we have enough offers conventional. Why do we have to select an FHA offer? We can get the same exact offer or even just a little bit less conventional and not have to worry about adhering to these FHA guidelines. So we're starting to see the FHA share of applications go down, conventional share of applications start to go up. Angel, I want to dive into something else. So when we're looking at forbearance, right, it's been a huge topic. At a certain point, we were almost at 10% of all mortgage loans in forbearance. That has started to trickle down, and it's trickling down week over week. It has now decreased to 4.36% of all loans. That's down from 4.47 just last week. So that's already 11 basis points down. Talk to me about this forbearance right here that you're looking at.
I think I mentioned this in previous podcasts, and I had said as we head towards the forbearance deadline, right, the rate was going to continue to decrease, and that's what it's going to continue to do. So It keeps getting lower and lower. Luckily, the economy looks like it's getting back to where it needs to be, so that's a good sign as well. But more importantly, since if people are thinking there's going to be some type of housing crisis because of the forbearances, that's such a small amount of homes in the United States, right? And the market, kind of Anthony mentioned in the past, would gladly take those homes if they were to enter the market, right? And we actually need that supply right now based on the buyer demand that's out there. So it's a good thing, obviously, for homeowners. We don't want anybody to lose their home, right? But if for whatever reason, if someone does have to go through that unfortunate circumstances, it's not going to affect the market again because of just the amount of buyers out there.
Absolutely. Another interesting note is that the share that are Fannie Mae and Freddie Mac, which a majority of loans are, has decreased from 2.42% to 2.32%. So that's a very, very small percentage, even compared to the overall total of 4.36%. Remember, at one point, we were talking just under 10%, right? So for those of you that do go through that conventional method, right, or FHA method of purchasing a home and not going, above the jumbo loan and sticking to Fannie Mae and Freddie Mac guidelines, then most people are pretty secure right now in regards to forbearance. Another thing that really caught my eye on this report, and it was just released yesterday on May 11th, is that only 12.5% of total plans in forbearance are in the initial forbearance plan stage. So 82.2% are in forbearance extension. The remaining 5.3% are in forbearance reentries. So meaning that we've had this forbearance out for quite some time already, right? It was initially launched for, about 6 months, a year initially. So some people are already in the extension phase. So they've been in this process for quite some time now. So they should already, a majority of them, be exiting forbearance pretty soon. And what also caught my attention is, of the ones that have exited forbearance, only 1.6% resulted in repayment plans, short sales, deed in lieu, or other reasons. So not very many here, based off of this report, resulted in any type of foreclosure, right? Of the ones that have exited, there are about 7.5% that paid off their loan through refinancing or by selling their home. So not a substantial amount of people are selling their home once they exit this forbearance period, based off of the data here. What catches your attention about that, Angel?
Yeah, I mean, a lot of people are again coming out of forbearance and taking advantage of the good rates. And it doesn't. Again, a lot of people don't. In a sense, the market's not as bad as people may think, right? So I get why people aren't selling their homes, and I'm not surprised that it's such a low amount. And the good thing is there are the repayment plans, right, if they are needed. But the low statistic doesn't really surprise me. I really felt that the market was going to be just fine, and thank goodness that banks are allowing people to put it at the end of their loan and pay it back in the future, right? So I think we're going to definitely be in a good come out of this forbearance completely fine.
Absolutely. Yeah. I mean, a majority that are coming out of this forbearance so far are either resulted in loan deferral, right? So they push it to the end of or they started to continue making their monthly payments. That's what we're seeing here.
Mm-hmm.
So really, really good news for the real estate market is that not very many homes are falling to foreclosure or even short sales. A majority are actually selling or refinancing because they have the equity to do so, and they can sell. So let's go ahead and move forward and go away from the mortgage news and what I really, really wanted to talk about today. And this is the explosion in the real estate market in 2021. I mean, it's crazy right now. We broke several records for April, according to Redfin's housing market update. And I want to go over these one by one so you can get an idea and gauge what's happening nationwide. So, first record we broke, a record high 21% year-over-year growth rate in the median home sales price, which hit $348,500, one contributing factor to the largest rate of growth is that more high-end homes are being sold now than a year ago. Asking prices reached an all-time high of $360,975. That's a lot nationwide. I know we're in Los Angeles. I know we're in Southern California. The market's a little bit different here, right? That seems like a steal here, but nationwide, that's tremendously high. Angel, what catches your attention about that record?
This is a good sign for where the real estate market's going. That number is going to get higher by the end of the summertime. So we're in an extremely healthy real estate market right now in a sense. I mean, it'll be good to have more buyers out. I mean, more sellers out there, of course. But the demand for home buyers the demand from home buyers right now is crazy. It's crazy.
Absolutely. Let's jump into the next record we broke. A record low of just 19 days on market for homes that sold during the period, down 16 days from the same period last year. So last year at that time, we're talking about 19 plus 16, that is 35. So 19 days on market. That's extremely quick. Angel, what catches your attention about that one?
That's crazy. I mean, and LA is crazy right now. We're in single digits days on the market. Nationwide, to be under 20 days in general, that's extremely low. Almost half of last year. Where was it last year? So again, just goes back to the whole thing of there's a lot of buyers out there. LA is the worst case scenario, right, for buyers right now, as far as such low inventory, such low buyers, but I mean such low days on the market. But it's happening everywhere across the country right now. It's crazy.
Next record we broke. A record high 48% of homes sold for more than their list price. What catches your attention about that one, Angel?
It's a good thing, right? It's a good thing for you home sellers out there who are thinking of making the move, ready to upgrade. Again, these are all good signs. We all talked about these signs in the LA market. It's the same thing across the country right now. It's a good sign for the real estate market that home prices are increasing right now, and 20%. 20% from last year. Crazy amount. Crazy. That's a 20% equity in a year. That's nuts.
Exactly. It's crazy. That's a lot. That's why it's very advantageous to take advantage of this market right now if you're a seller, because I'm diving into the next one. Next one is a record high 101.4% average sale to list price ratio. What that means is that homes are selling for 1.4% more than what they're listed for. So, Angel, what catches your attention about this one?
1.4%.
It's 1.4%. So let me break that down for you. Let's just say your home is worth, Los Angeles County, $700,000, right? Just multiply that by 1.4%, and that's how much more a home is selling on average, right? So 700,000 times 1.4%. We're talking about
$10,000,
roughly, right? So roughly $10,000 more on average.
Mm-hmm.
In Los Angeles County, we've been seeing different numbers. It's a little bit higher than that, but throughout the United States, 1.4% on average more. What catches your attention, Angel?
It's not surprising based on the other numbers, right? The only way to get to new highs, new median highs across the country is by people willing to go over the asking prices, right? People willing, a demand from the buyer side. So of course, when there's little demand, people are going to go over a little supply. People are going to be willing to go over that asking price to get that home. So it doesn't surprise me in a sense, but again, it's just a good statistic to show a strong real estate market right now.
Absolutely. And then this ties into the median days on market record of 19 days. So a record high 58% of homes went into escrow in under 2 weeks, and a record high 45% of homes went into escrow within 1 week. That last one really, really should catch your attention. 45% of homes that are listed go into escrow within 1 week. Angel, what catches your attention about all this in total right here? The extremely high sales prices, the record high average to list ratio, right? Like how much are homes selling over asking price, and then how fast homes are selling.
I mean, we've kind of gone over it with LA County already. But it's just being ready as a buyer, right? It's this shows that anywhere you go right now, if somebody's watching this, we're obviously our target market for us as a realtor and a lender is here in LA, Orange County, Southern California. But if someone's watching this in Arizona, if someone's watching this in New York, someone's watching this in Alabama, whatever state, I mean, they're gonna be these tips we're giving is gonna be useful for them as well, right? Because this is happening across the country right now. That's absolutely crazy for almost half of the homes to be going under contract in 1 week. That's in LA County last year. I think we were in market for 2-3 weeks, something like that. Mm-hmm. So for almost half of for the whole country in total, for almost half the homes to be in escrow within under a week is insane. And in general, it just shows that you as a buyer need to be patient. You as a buyer need to be ready to make strong offers, and you need to get pre-approved. Don't be looking at homes, guys. Don't be looking at homes if you haven't talked to a lender. It's going to be a waste of time right now with this market. But yeah, it's definitely a good sign to show that we're not going to be in any housing crisis anytime soon.
Absolutely. So to reiterate, homes are selling faster than ever. Homes are selling for more than ever. So if you're a seller, this is what you're predominantly looking for, right? And right now, you can take advantage of this market. You have all the leverage pretty much. You can get all the terms that you want. You can make it as easy as an escrow as you possibly want it. You can, sell the property as is. You can sell the property contingent on your terms, right? A free rent back, increase the earnest money deposit, lower the contingencies. There's a lot of leverage that sellers have right now. So I would take advantage of this real estate market as it is right now. If you're looking to sell, we're expecting to have a lot more inventory hitting the market towards the end of the year, which might decrease the pace of the sales price growth. We still nonetheless expect home prices to increase month over month, but it's going to probably decrease, in my personal opinion, based off of the data that I've seen and research that I've done, at least here in Los Angeles County.
Decrease or just slow down?
Slow down. So sales price growth is going to slow down.
But it's going to continue to increase.
Okay. is what I'm projecting. So with that said, it's a really, really good time to sell. Then that leads me into the last thing that I want to cover, right? So we're talking about the explosion of the real estate market here in United States. And according to Redfin, U.S. home sales likely to hit record high of 2.5 trillion in 2021. That is equal to the GDP of France. That's how much homes. That's how many homes we expect to sell this year. We're gonna have more home sales than we've ever had expected since Redfin's been telling this since 1999. So that's crazy real estate news. Angel, what catches your attention about this?
I mean, obviously, people going over asking price, little inventory, so many buyers. There's going to be such a high forecast for sales, and I expect that forecast to be met. I don't see any slowdown right now. It's been absolutely insane. So 2.53 trillion does seem definitely doable, and I wouldn't be surprised if it went over that, actually.
Yeah, absolutely. And Redfin actually categorizes, the four sectors of the United States, right? South, the West, the Midwest, and the Northeast. South has always led with the most home sales, but the West is right behind them. So it's crazy that we're seeing this uptick, right? Not just in specific areas. It's not just a California thing. It's not just a South thing. It's not just a Northeast thing. It's every area of the United States is essentially selling at record pace for record prices right now. So it's something that's really, really caught our attention, right? The explosion of the real estate market in 2021. I don't know if we will ever see anything like this. I don't anticipate home prices to continue at this explosive pace, right? As we mentioned before, in Los Angeles County since January, home prices, the median sales price has increased about $80,000 in Orange County, over $100,000. Like there's that's so quick, right? It's if you're a buyer right now in this real estate market and you just purchased a home, you probably thought you got in at the perfect time, but little did you know you just purchased a home a couple months ago, and it's just the market is really explosive right now. If you purchased your home a year ago, you probably thought you got in at the right time. If you purchased a home 5 years ago, you probably thought you got in at the right time. If you purchased your home last month and you see that it increased $40,000 more, you probably thought you purchased your home at the right time. So it's just really making that move at the end of the day, and just knowing that I'm in it for the long run. As long as the payment is comfortable, I'm gonna be okay.
And one thing to mention too is, here in California, people, everyone wants to invest, right? Not everyone, but people want to invest their money in real estate. It's a great, secure investment. These trends here are showing that it's good to invest in other states as well, right? In the South, you can find homes for really cheap. In the Midwest, you can find homes for really cheap. Pretty much anywhere, where in California, $300,000 doesn't get you too far. In another state, it can get you a lot, right? So something to think for if anybody's looking to invest out of state. These trends show that if you put your money out there as well, your home's going to be appreciating. There's going to be a demand in the future for it, and it should be as a pretty secure investment as any real estate investment pretty much is.
Absolutely, Angel nailed that one. It's good to always diversify. If you purchase homes, you don't have to just purchase and stick to the Los Angeles County or to the Southern California market, right? Different markets react differently to different factors. So if you have homes in different areas, you're not so concentrated on just one market. And if that market takes a dump, then doesn't necessarily mean that the other markets will. They're actually during the recession 2008, 2009. Some real estate markets were unaffected. They just didn't actually decrease in home sales price. So that's why it's important to diversify, and not just like how you're investing, right? Stocks, mutual funds, bonds, real estate holdings, but also where you're diversifying, when you diversify, are also really important things.
And it's not necessary, right? Like, I'm not telling people it's not good to have all your homes in LA County. I'm not saying that by any means, but it's just a good option for people because, again, LA County is expensive, right? Mm-hmm. So it's a good option to look at. Just one tip for anybody who doesn't know anything about real estate investing out of state. We've never done it ourselves either, but I know we've both thought about it, and so people are saying, okay, how am I gonna have a house in Chicago and I live in California, right? So there's property management that can help you with that. So there's definitely a lot of tools. If you guys ever haven't heard of Bigger Pockets yet, the website and the podcast, they give really good tools as well and tips. So there's definitely a lot of help out there to make that happen if anybody has been thinking about that.
Absolutely. So all in all, I'm just gonna kind of recap this quickly for you. Mortgage applications, they went up. Mortgage rates, they went down. The number of people in delinquency, that went down. We're trending towards very, very low levels, right?
Forbearance.
Oh, I'm sorry. Yeah, the amount of homes in forbearance went down, and delinquencies also went down, Angel. So the amount of home sales, right, is going up. The average median sales price has gone up about 21%. Homes are selling now for 19 days on market, record pace. We've never seen anything faster than that before. So all in all, what does this tell us? It's really an advantageous market for both buyers and sellers. Buyers, you can take advantage of this extremely fast appreciation rate to get to that 20% equity that you need to remove that mortgage insurance, make your payment more affordable. Aside from that, it is a little bit tougher. Sellers, you really have all the leverage here. Homes are selling faster for more than ever. I would really recommend taking advantage of this, or even maybe doing a cash out refinance to purchase another property, right? You can leverage your home in much more ways than just selling it. With that said, I want to thank you, homies, for joining us for this podcast. I hope you found this insightful. I want to wish you all the best. Take care and stay safe.
Thank you, guys.
Hey, homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.